Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is March the 23rd. It's already Thursday. It's almost the end of March. It's almost the end of the first quarter. Just a couple of things from let's call it a housekeeping point of view before I get into this presentation here on some Canadian oil stocks that I want to chat about. If you go to oxy.com, so the website for Occidental Petroleum, you'll see some new filings. Some of these you might not recognize. ARS is simply an annual report. It's about 150 pages or so. So if you're looking for some weekend reading because you are bored and you need to see what Oxy's been doing over the last year, you can read the annual report. These other forms that have been filed here, the DEF 14A and the DEF A14A, are proxy forms related to Occidental's upcoming annual meeting, which I think is on I think May the 4th or something like that. Anyway, what I want to do this evening is share with you some Canadian stocks, and I'm going to kind of fly over some of these first screens or so, because I just want to talk about a few stocks that we don't really talk about too often. Many people in the past have asked me about Suncor Energy. It's a fantastic oil company, integrated oil company out of Canada. Some of you might know that I have a position in Pembina. Pembina is a pipeline corporation. It's not dissimilar to Energy Transfer, except it's not as diversified as Energy Transfer in the United States, because Energy Transfer also owns retail, which is Sunoco. Other than that, they're pretty much the same, except Pembina is a little bit smaller than Energy Transfer. And then a couple of stocks. Cenovus is an example of a stock that pops up all the time. A lot of the people on this channel are invested in Cenovus. And then two that I've never talked about before. So one of them is a company I know quite well from a previous lifetime, Canadian Natural Resources, great company out of Canada, headquartered in Alberta. And the other one, which I've never talked about before, is Paramount Resources. The reason why Paramount Resources came to my attention is because one of my sort of people that I follow, I don't want to say one of my heroes, but certainly one of the people that I pay close attention to is Cooperman. And he's the owner of the family office, Omega. And he said, Leon Cooperman said Paramount Resources is one of his favorite energy stocks. And I thought, like, it's interesting. I'd never really talked about that one before. You can buy it in Canada if you're a Canadian tax person or investor. You can buy it under the ticker symbol POU.TO for Toronto. Trades on the Toronto Stock Exchange. Otherwise, if you're outside of Canada, you can buy it OTC under the ticker symbol PRMRF. Anyway, the company is called Paramount Resources Limited. I don't know too much about it, so we'll go into a little deeper dive as I go through this presentation. These companies are not all the same. They are similar, though, because they're all sort of energy-related type companies. So Paramount is oil and gas, Pembina, production and pipeline, Suncor, integrated oil. Suncor is one of the largest oil fields in Alberta. And then Canadian Natural Resources is exploration and product, and Cenovus is also integrated. So sort of similar to Suncor, but more natural gas, whereas Suncor is not so much focused on natural gas. The other thing that's interesting about Cenovus is recently they acquired Husky Energy, and Husky is a great company too. So now it's sort of Cenovus Husky as one combined entity or merged entity. So if we look at the technicals here, I'm just going to look at the raw stochastic, so the 20-day raw stochastic. If it's over 80%, it's basically overbought. None of these are over 80%. Paramount is kind of edging up there, but it's only at 63, so none of them are overbought. The other thing that's interesting here are the analysts. 4 of them are rated as sell, and quite heavily so, 88%, 40, 56, and 88% respectively. And only Paramount is a buy. Now, I'm not sure if that is a buy because Leon Cooperman said he's liking Paramount, and it's one of his favorite energy companies. And maybe there's something else in play there. I'm not too sure. Anyway, moving on. So if we look at the performance, I'm not going to spend too much time here either, because I don't really care too much about 5 days, 1 month, 3 months, etc. But if you look at 6 months, if you were long on Paramount for the last 6 months, you're probably kind of happy, because most of the energy stocks have pulled back quite considerably, but Paramount is up almost 27% in the last 6 months. Pembina just breaking even. Suncor up 12%, not bad. Canadian Natural Resources also up 12%, not bad. And even Cenovus up 7%, not bad. But wow, Paramount just in the last 6 months up almost 27%. Most recent earnings, good all across the board. All of these companies have had positive earnings. $1.76, 29 cents, 133, etc. And then at the bottom, you can see they all pay a dividend as well. Now, a couple of things that are always interesting to me on this particular key statistics slide here is comparing the annual sales to the market cap of the company. And you can see Paramount is running, we're talking about sales, right? This is revenue, it's not profitability, but annual sales, 2.5 billion. The market cap is only $4 billion. But take a look at this one. Suncor is generating almost $45 billion in sales, and its market cap is only $40 billion. Similarly, Cenovus is now, as the combined entity with Husky Energy, generating over $51 billion in sales, and its market cap is only $31 billion. So these two companies, Suncor and Cenovus, based on key statistics, is outshining. They are outshining the other three with a significant revenue pop compared to a market cap currently that is somewhat not reflective of the business that they're driving. In case you don't remember what market capitalization is, it's the number of outstanding shares multiplied by the current share price. So at a glance, it kind of looks to us as if Cenovus and Suncor are undervalued, and maybe to a lesser degree, Paramount as well. If you were long in these, so over the past year, so I looked at a 6-month performance. If you looked at it over the past year, you're probably not a happy camper, arguably just being in energy right now, because energy has pulled back so much. And don't forget that last year we were up 57%. So for the majority of people who are long in energy, you could probably take a little bit of a hit. But look how the trajectory of the graph actually follows the same lines for all of these 5 equities. So even though they didn't necessarily perform the same in terms of the return on investment, you can see that they're sort of following the same path. Cenovus has been flying high, but now it's pulled back and it's kind of sort of just me too. It's a big bunch here. They all ended up together over a 1-year period. So despite this massive spike in Cenovus going back a year now almost, and then a couple of spikes as well, which were pretty good, it hasn't really maintained the traction that it has developed. Now let's take a quick closer look at Paramount Resources here, because as I said at the beginning, this is new to me, and if it hadn't been for the fact that Leon Cooperman is buying Paramount, or otherwise he's keeping Paramount, but he certainly says it's one of his favorite energy stocks, I would not have paid attention to it at all. You can buy it for 30 bucks Canadian. That's approximately, for people in the US, maybe $24 or so US. Right at the bottom here, you can see in the 52-week range, it's kind of sitting in the middle, right between 20 and 40, and it's currently at about $30. So it looks at a glance as if there might be some upside there. Over here to the right-hand side, a market capitalization currently of around $3 billion. This is Canadian dollars. A PE ratio very attractively priced, price-earnings ratio of only 6.35. Anytime it's currently under 12 or so, it's really, really attractively priced, and this one's only 6. Obviously, earnings per share, as I said, positive. And right at the bottom on the right-hand side, you can see it's currently paying a dividend of $1.50 in Canadian dollars, which at its current share price of $30 Canadian is yielding over 5%. So there are many reasons to like Paramount Resources. And at a glance, even though I'm just going through a bit of a snapshot here, there doesn't seem to be too much wrong with Paramount Resources. So this is a little bit tricky to read because it's off the wires. So this is Reuters reaffirming its 2023 and preliminary 2024 sales volume guidance, as well as its 5-year outlook for sales volume. It's pretty good. Reaffirming, right? No one's pulling back here. They're actually saying whatever our guidance was, not only for the next year, but even over the next 5 years, we're pretty much reaffirming that. 2023 capex, $700 to $750 million, with an increase in 2024 capex, $700 to $800 million. And there you can see the quarterly earnings per share at the bottom, $1.76, good performance. As I said, not too much wrong with this one, but if you wanted to invest in Paramount Resources, you should probably do a bit of a deeper dive than what I'm doing right now. Looking at CFRA, so this is their analyst report from March 18th. So it's just a few days old because today is March the 23rd. They're saying hold. And in general, even though they're saying hold, it's mostly sort of neutral, edging on positive, right? So they've got a price target here, 27.65. Actually, that's more reflective of the price it was on March the 18th. Valuation, quality, growth, and price momentum kind of neutral. A little bit of negative sentiment from the street. I'm not sure why there would be negative sentiment from the street, but it'd be interesting. Anyway, Paramount Resources explores for and develops conventional and unconventional petroleum and natural gas in Canada. Now, if I look at the peer comparison, and here's where it kind of gets interesting to me, because I'm looking at Paramount Resources and I'm going through these review slides and the analyst reports, looking as I usually do for anomalies. And this is really interesting because many of these companies I am not familiar with at all. And some of you guys might be, especially the Canadians who watch this video, you guys might be very familiar with Paramount and Advantage and Birchcliff and so on. But look at this one down here, Spartan Delta Corp. The reason why it caught my eye is because out of all the holds and even buys, Spartan Delta Corporation is a strong buy. Now, I had never heard of Spartan, but the minute I get distracted, as I did on this particular slide, because I was actually looking to see how Paramount is comparing or is being compared to its peers. And then I find this little pop-up here, Spartan Delta Corporation, which is a strong buy. Now, Sparta, so here we go, I'm distracted, right? So Sparta, you can buy for $13.37 Canadian. So it's a sort of around $10 US. Its market cap is 1.6 billion. So it's not a micro cap by any measure. It's actually a reasonable sized company. And once again, we have a 52-week range here of around $8.50 to around $16. So it's kind of edging towards the higher side, but it's $13.37 right now. So there's more than $3 hiding away there in terms of its 52-week high. We also see a PE ratio, which is very, very favorable at only 3.4. Now, remember, I just said Paramount was at 6.35, which is pretty good. This one's 3.4. Now, sometimes when you look at these metrics, you might find that some of the numbers look good for all the wrong reasons. And that's one of the reasons why I say you need to do a bit of a deep dive before you park some money into any of these stocks. Positive earnings per share, 388, obviously for the last quarter, is pretty good. So what is CFRA? The same CFRA on the same date, March the 18th, said Spartan Delta Corp is a strong buy. And what do? So they engage in exploration, development, and production of crude oil and natural gas properties in Western Canada. But look at this little quantitative model driver here. Unlike Paramount that I just showed you, this one is positive on valuation, quality, and growth, and neutral on street sentiment and price momentum. Now, guys, as I said, just as not only for the sake of transparency, but also just to reflect my non-bias in terms of the information I'm sharing with you, I don't have a position in Paramount Resources, and neither do I have a position in Spartan Delta. But there may be some people watching this video who do. So if you do, I would be interested in your investment thesis. And I think if you can share that narrative with our community, it could be mutually beneficial to people who might be interested in opening a position in Spartan or Paramount Resources. Again, just off the wire here, so tough to read, but follow with me. So Spartan, quarterly adjusted funds flow of 233 million. That's pretty good. Or expressed otherwise, $1.31 per share, fully diluted. Good results, good company. CFRA says this is a strong buy. CFRA says Paramount Resources, Leon Cooperman's favorite, is a hold. So I'm not sure, guys. Are you long in Paramount or Spartan or the other three that I mentioned, Suncor or Pembina, or what was the other one? Canadian Natural Resources. If you are, maybe let us know and tell us what you think. If you're not long and you might look to any of these to open a position, that'd be interesting too. Like, why would you invest? I mean, there's so much that you can invest in energy right now. So on that note, guys, I don't know. So maybe you can let me know if you have an opinion or what you think in terms of these Canadian heavyweights that I just shared with you now. So on that note, this is Rudy signing off saying thanks for watching. Talk to you soon. Bye-bye.